It's time to do business. Welcome to 55 Minutes of Business on Business Incorporated. Here's what we have prepared for you. In Kenya, the GDP for the third quarter of 2024 is out, and it shows a 4% decline. And we're going to discuss tokenized real estate. What does it mean, and how can you tap into it? South Africa car sales drop, especially the new cars, down. Good afternoon, everyone. I'm Ini John Mekwa. Let's do business. Now we start from the oil space and tell you that oil prices rose on Wednesday as supplies from Russian OPEC members tightened, while data showed an unexpected increase in U.S. jobs opening. Let's look at the numbers. Still going up. Since the beginning of the year, we've seen an increase in Brent. So today, it's gone to $77.37 a barrel, up 0.42%, while for WTI, $74.67, up 0.57%. And then from there, we move to metals and see what's going on with the numbers right there. We see spot gold is in the red this afternoon, 0.1%, $2,648.16. US gold is also down, $2,662.30. Spot silver is on the flip side, gained 0.3% at $30.11. Platinum is back in the red, and palladium also down, $923.87 per ounce. Looking at the drivers for this, the dollar strengthened again, and the benchmark 10-year Treasury yield hit an 8-month high after data on Tuesday pointed to a strong economy. Talking about the U.S., of course, the U.S. Job data and openings in November is what led that. It grew by more than 8 million, and the market is now awaiting non-farm payrolls, which is what investors would use to make their next line of decisions. Now, the World Bank has asked private sector investors in Nigeria to play a leading role in achieving its ambitious Mission 300 initiative, which aims to connect 300 million people in sub-Sahara, including Nigeria, to electricity by 2030. In its report tagged Mission 300 is powering Africa, the Bretton Woods Institution says that it has committed to connecting 250 million people, while the AFDB will provide electricity access to an additional 50 million individuals. The initiative is a collaborative effort with the African Development Bank, that's the AFDB, which seeks to address the region's significant energy access gap, while nearly 600 million people, that's about 83% of the global people, are unelectrified, that is lacking electricity. Now, the China Development Bank says it has granted the first tranche of about $255 million loan to support the Kaduna-Kano railway in Nigeria, and this is to ensure smooth construction of the transportation initiative. The loan approval comes after China Exim Bank, which was to be the funder of this project, backed off from the project. In addition to easing transportation, the CBD says that the project is expected to spur economic growth by fostering the development of industries along its corridor and also create numerous employment opportunities during its construction and subsequent operations. The railway project has been making steady progress so far, and the CDB said that it mentioned that it will closely coordinate with the Nigerian partners to ensure the smooth disbursement of subsequent loans and also effective post-loan management. Well, some company news now. Nigeria's biggest palm oil processor, Presco PLC, is set to raise 100 billion naira in Series 1 of its 150 billion naira bond program from the capital market. The bond, which will have a 7-year tenure with a yield range of 23.25% to 23.75%, would mark the largest corporate bond issuance in the industry, as well as renewed confidence in Nigeria's capital market. Before Presco's latest issuance on the NGX-listed company, some of the largest corporate bond includes Dangote's 112.42 billion naira raise in December, Dangote Industries' 300 billion bond issuance program. MTN Nigeria also did the same 200 billion bond issuance, and that happened in September 2022. Duplo, a provider of technology solutions for African businesses, is highlighting the need for inflation-adjusted compensation packages as inflation and currency devaluation impact finance of employees. The compensation reports revealed most employees in finance were dissatisfied with current pay. Mr. Yele Oyekola, who the chief executive officer of Duplo, was a guest on Business Morning earlier today.
What we're seeing this year is that, for me as a tech provider, what would happen is we focus heavily on finance teams. And every single month, we were pitching to businesses, and we're pitching to a new CFO every single month because they're just being replaced. People are just leaving. And just turnover is just, rapid in the industry, or across different industries. And yes, mostly to Japa. Inflation is very high, and it's very difficult for businesses to pass this cost to their customers as well. So it's like a case of businesses can't pay because they're not earning as much, and employees aren't happy at all. And how they're solving for this is by just leaving the country and looking for other jobs that could pay better. People are kind of stuck in their jobs, and that's what led to us telling businesses to actually find ways to adjust for inflation. But like I said, it's easier said than done. But it's very important that with this wave of technology, AI, data, they just need to upskill, or else they'll lose their jobs to technology, unfortunately. So yeah, upskilling is very important. We're seeing that a lot of employees actually want to be upskilled, but the businesses aren't helping them do that. I think about 71% showed that over the last 5 years they've done some trainings, but that's dwindled significantly over the last 1 year because of this cost of living issues. So yeah, upskilling is very important. Secondly is just bringing your best self to work.
So now, talking about that investment opportunities that may be existing in the real estate, especially the tokenized space, that perhaps will be one of the conversations for 2025. Now, we do know that recently the Pension Fund Operators Association of Nigeria revealed that the dearth of real estate investment trusts in the market has seen investments in that segment shrink in the past 5 years. This was shared on their Instagram page, official Instagram. And pen-up analysis showed that investment in the real estate industry had declined from a high of 239.28 billion naira. I guess we could say in 2024, every sector was affected. Do we see brighter light in 2025? Let's discuss with the country manager of Red Swan, Mr. Tunde Olasukomi joins us in the studio. Mr. Olasukomi, good afternoon and welcome to the program.
Good afternoon. Thank you so much.
Yeah, so first of all, give us an overview of happenings in the real estate sector in 2024.
All right. Yeah, in 2024, the real estate sector was hit badly. Especially in Nigeria because of the currency devaluation, and additionally the purchasing power of citizens actually dropped. Then the high rate of inflation increased construction costs, materials and the likes. So the office sector and the retail sectors were the two sectors that were majorly hit. That's because companies downsized, reduced their staffs, changed to hybrid pattern, so they don't need the large size of space they were using before. So then on the retail part, we saw some exits in terms of foreign brands that are into hyper retail services, and that's because the purchasing power of people have dropped, so people could actually acquire less luxury But the advantage in the retail space in 2024 was that we saw the expansion of neighborhood supermarkets that are closer to residents, where people can actually get their grocery. As you know, that the three basic needs of man is shelter, food. So food survival instinct was what was more important in 2024. However, there were some green lights in the hospitality sector. That's when it comes to hotels, short-let apartments. Then also, funnily, the residential sector also witnessed some growth, especially that's the low income and middle income class building. And that's because, urbanization is still growing and people definitely need to stay in apartments. So there was high increase in the lower class of rentals. Then there was a bit of growth also in the data what's it called? Data sections. What that means is that companies, because of the digital economy, so the need for infrastructural development in the data centers sector grew. So we saw a lot of investors, foreign investors coming in. As you know, that the digital economy of Nigeria is becoming larger. So there's need to build data centers that would keep those records, so there growth in those axes.
Yeah. So there's something I always wonder when it comes to real estate. We just see prices soaring. Even when it does seem like demand is reducing, and even if demand is not reducing, supply is increasing. I mean, if you go to especially highbrow areas, both in Lagos and Abuja, you see a lot of, construction going on, duplexes, more of residential, but it never obeys the simple logic or principle of economics, which is when supply increases, we could see the price reduce. I don't think that affects the real estate.
The constructions you see going on look large, but actually it's still, the demand still outweighs the supply. As we currently speak, Nigeria has about 20 million housing deficits, and the current pipeline is ridiculously still lower to satisfy that demand. So though you are seeing construction, but the demand is still very, very high, especially in the urban centers. And as well, some of those units, Abuja is I think the state that has one of the largest supply of housing currently, because day in, day out, you continue seeing development. But however, that supply is still not yet to fill in the demand gap.
And yet we have a lot of unoccupied premises.
That's
so it doesn't balance out.
Yes, on that, as regards the unoccupied space, there are different classes of residential buildings. So we have the high-end, which is the high-end luxury, the middle income class, then the affordable housing class. So for some of those that are high-end, so there are some form of demand from HNIs, that's high net worth individuals, then institutional investors as well, then mostly the diaspora investors, the one because they have a higher purchasing power because of the exchange rate advantage. So those are those that actually have the capacity to buy and purchase such kind of development in recent times.
So what do you see in 2025? At least the value of the Naira has been kind of stable within a certain range for more than a month now, which is a major driver of construction because most of those things are imported. So what do you see in that space, the real estate space?
Yes, in 2025, we hope that as the economy begins to show some form of improvement, it will have a ripple effect on every other sector, real estate sector inclusive. So, and on that, in 2025, the demand in the affordable housing space will still continue to increase because the population is increasing. Then also, when it comes to the tourism, hospitality sector as well. So there's been a lot of attention on Lagos especially in terms of our entertainment industry, tourism attractions, and a few others. So we'll see more development in that aspect. Then hopefully we hope that the office buildings will also pick up as co-working space, tech hub, remote working locations, some of the form of trends that are growing now. Then additionally, in 2025, one of the most neglected sector in real estate in Nigeria particularly is the purpose-built student housing sector. So we actually do not have like a well-organized student housing environment or community. Countries like South Africa and even Kenya are doing better as regards that. Then, but hopefully, like for example, our own organization will be looking deep into that aspect. So such a way that we'll be able to nurture the coming generation. And
so that could be a form of investment for some individuals,
yes,
perhaps in this year, even though it's really capital intensive and sensitive.
Yes, that is the help of technology is going to change that narrative. And the reason why I said that is that currently the use of blockchain technology to tokenize real estate, that is we translate physical assets, which is reward assets, on the blockchain to make it affordable, such that people can invest in fraction. You don't have to have all the million naira before you invest. So you invest based on what you can actually afford. So we see that especially for diasporas, because with the help of technology, irrespective of their location, they will be able to have access to invest back home by just a few clicks on their phone.
But you know, we've had a lot of not so good story in the real estate. People being duped and all of that. Now you want to make it virtual, tokenized and all of that. You need a lot of convincing to do to get people's buy-in.
That's correct. Yeah, that's correct. But one thing is, technology revolution is something you can't stop. And technology revolution also brings a lot of advantages. Like last year, we saw that even top financial organizations across the globe have now started exploring the technology option, because it brings speed, it brings liquidity, then it also brings affordability, then trust. So on that, I think the regulatory aspect is what will safeguard both investors and the developers. And the current leadership team of the Security and Exchange Commission in Nigeria, which is SEC, that is led by Dr. Agama, they've actually been interested in that sector to make sure that the bad actors are put away and just the good actors are well maintained. So I believe when there's a lot of diligent regulatory oversight, then the curb of fraud and some of the inconsistency in the future, in the past rather, will be well corrected.
So how does it work, the tokenized real estate?
Okay, all right. It's simply like, let's assume this building we are in is worth $1 billion. Is that an assumption? But before now, maybe middle class or high net worth individual, or let's say 5 billion, who are the ones who can actually afford to invest in such, or institutional investor. But with the help of tokenization, the building is being fractionalized into smaller units, such that retail investors can be able to participate. But apart from that as well, before now, traditional real estate such as REITs and private REIT and public REITs usually have a long period of waiting, waiting period, like 5 to 10 years. But with the help of tokenization, people can pull out liquidity in a faster manner, and they can actually trade the shares of their real estate in 247, be it weekend or weekdays, and irrespective of their location in the globe, they will have access to invest in such opportunities and also have access to pull out their liquidity whenever they need.
Does this eliminate the challenge of CFO and getting governor's consent and all of that? Because that is also a deterring factor in real estate investment.
Yes, in Nigeria, Nigeria is a very peculiar terrain, and the traditional part are not being side-looked, they're not being excluded. So what is that? Before we get to the digital point, there are a lot of due diligence that go into play, such as the title search, such as running the numbers and the financials, then also dealing with the right developers to ensure that all parties are well being protected. So when the required legal paperwork and due diligence has been done, so that's when we then move it to the digital space. So we don't look away from the traditional bottlenecks, but with the advent of technology, all of that are resolved, such that you don't have to put all your eggs in one basket. Let's say before now you want to invest in real estate, you identify a building and you put maybe 50 million in that building. That's a single whatever. You can wake up tomorrow and they tell you it's on a government property, the place will be demolished, or you have a tenant that is not responsible. But with the advent of tokenization. That same 50 million, you can spread it into 10 and invest in different classes of assets. Like I said, 10%, 5 million is going into office building, 5 million is going to student housing, 5 million into residential. So that way you diversify your risks, and we also have a better cost averaging in the long run. So that's one of the advantages of tokenization. So it helps to diversify. Then additionally, it also assists in bringing in FDI, that is foreign direct investment, which means that foreign investors that seize opportunity here can easily have access to invest without having to come down, and you can do that just the same way you send mails on your phone and the other person get it at the next end. So that's...
Yeah, but you still have to deal with the issue of the papers, that is a major one. So perhaps you have to work with the government, especially if you want the diaspora or the international markets to also be interested. But thank you so much for your time and sharing this opportunity with us, Mr. Tunde Olasukomi, Country Manager of Red Swan.
Thank you so much.
Let's take a break now. When we come back, we'll head to the market, see what intraday numbers look like with Aniti Edit. Join us. Welcome back to watching Business Incorporated on Channels Television. Let's head to the markets now with Aniti Edit. Aniti, good afternoon.
Yes, good afternoon, Nini. Okay. So yesterday we were talking about Nigeria's equities market. This time we're talking about the fixed income market. But before we go to the fixed income market, I think Nigeria's stock market, yesterday it closed in the red.
Yes,
but look at your board here. Intraday, we're still, that's, I don't want to call it a magic number, but let's call it a magic number.
Yeah, but I mean, I think it's getting boring, Anita. We've been on 103,000 for almost, since last week.
About a week
yeah,
now.
So, I mean, let's move. We need some movement.
Well, definitely. The Santa rally, yes, this is about a week after we crossed into 2025 and the 8th of, so we've had about 4 trading days so far. And then, but let's just take, we hope that this number would go in higher. We don't like to see lower numbers.
All right.
Okay, so this is for Wednesday midweek trading session, intraday numbers that we see on the board there. This is the last track, just about over an hour ago that we tracked these numbers. So these numbers will be going either upwards or downwards. But so far, month to date, which is into 2025, the market has receded from what it had as its month to date or year to date, which was plus 0.7% to about 0.46% for the close of Tuesday's trading session. But so far, the market has been able to shake off some of that, the impact of the losses it saw from financial services, from the banks, as well as some insurance stocks and some other high-value companies on the NGX. And for the Johannesburg Stock Exchange, we see a 0.41% pullback for the intraday market sentiment there. And it has also dropped from the 84,000, which we last saw. We were talking about our numbers being boring there. But when you talk about it being boring, it wouldn't be also at the same time to see that the numbers going down. But what's good news for some people, for some investors, might be bad news, vice versa. So some would be trying to go into the market, especially when the prices have gone lower, and of course, making their investment start for 2025. Okay, so now let's take a look at the other markets on the African region. Okay, so that means out of 4, it's a square. Half, two of the major markets that we track are in the green, while the other 2 are in the red. But this is for the close of Tuesday's trading session for the Nairobi Stock Exchange All-Share Index. And guess what? It's been able to climb a little bit higher. Yesterday, we saw it at 127.5 something thereabout at intraday. But for the close of Tuesday's trading session, it was almost up by 1%. While the EGX 30 for the intraday market numbers, it fell by 0.7% to about 29,000. Still has not been able to climb back to that 30,000 level, which it left a couple of weeks ago. So that's it for the equities markets across the African continent. Okay, so now from the equities market, let's talk about the fixed income, the domestic fixed income market, where yesterday we saw there was an OMO auction, which is the first for the year 2025. And at the same time, as we speak, there's also an NTB, that's the Nigeria Treasury Bills auction, which is currently being carried out by the central bank as well as the Debt Management Office. So now let's talk more about this, and to give us an insight or more details about the OMO auction of yesterday as well as the ongoing primary market auction of the Treasury Bills. Let's bring in Nonso Ifejo, fixed income dealer at Treasury, as well as an analyst at Access Bank, to give us details about this. Thank you for joining us, Nonso.
Thank you, Ini. Happy New Year once more.
Okay.
Just as you rightly mentioned, we had an OMO auction yesterday. Basically, I like to start from the position of the market liquidity, which is a driving force of some of the things that we see happening in the market. We've had 4 trading sessions in the year, as you rightly mentioned, and we've seen liquidity above 400 billion. And yesterday, midway through the trading session, we saw the Apex Bank come into the market, and they offered 500 billion worth of papers, 250 billion on the 364-day paper, and 250 billion on the 350-day paper. At the end of the auction, when the results was released, we saw that the subscription level stood at about 1.5 trillion, which can be considered as overwhelming. But the CBN sold exactly what had been offered, with a little shift from the short end from the 350-day to the 358-day, with the 358-day sales standing at 350 billion, and the 350-day paper at 150 billion. We saw the results print at 23.84% for the 364-day paper, and 23.81% for the 350-day paper. And coming into today, we have the NTB auction. The offer is for about 550 billion, 385 billion on the long end, 80 billion on the belly of the curve, and about 50 billion on the shorter end. Our expectation for this is that some of the offers from yesterday, some of the subscriptions from yesterday that was not taken up will filter into the auction today. So we expect that this will be fully subscribed or possibly oversubscribed. If you recall, the last auction for the year closed, we saw the long end close at 22.9%. The 184-day paper closed at 18.5%, with the 91-day paper closing at about 18%. However, because of the bullish stance that we have seen from the auction yesterday, that's the OMO auction, we expect these rates to come down a little bit. So our expectation is for rates to print at around 22.5% to around 22.8% for today. Thank you.
Okay, Nonso, I think because of time, we would have to cut you a little bit short. But I know that sometime next week, we will be expecting the December inflation numbers to be released by the National Bureau of Statistics. And of course, investor sentiment would also be skewed towards that inflation data. But thank you so much. We will look out for the outcome of the NTB PMA, which currently being carried out for tomorrow, when the auction result will be released. So thank you so much for your time on the show.
Thank you so much, Yanni.
Okay, that was Nonso Ifejo, fixed income dealer and Treasury, as well as an analyst with Access Bank for the fixed income market sentiment. Okay, so Middle East is what we have here. Dubai and the Abu Dhabi, both on the United Arab Emirates. These two markets have closed just about an hour ago. But what we had as the last track for the intraday market numbers is kind of a mixed picture there. Abu Dhabi in the green, while the Dubai in the red, just a tad, 0.01%. 5,213.51 for that Dubai index, and 9,471.48 for the Abu Dhabi index, both on the United Arab Emirates. So that's for the intraday market numbers. And for the other two markets for the Middle East, the Saudi Arabia Tadawul, we saw the impact of profit taking its toll on the Tadawul. That's for the Saudi Arabia Stock Exchange. there, which is owned by the Tadawul by the Tadawul Group. 0.12% was chopped off there from the market's numbers, while for the Qatari Stock Exchange we see an addition there for the intraday market numbers, 0.04% at 10,455.97 for that market. So that's it. That's the snapshot for the two markets here. And for the United States numbers, the stock futures were kind of lower ahead of the opening bell later today, where we see the impact of the sharp decline in big tech stocks, as well as renewed fear on the part of rate cuts, spurring a sell-off on Wall Street. We saw that the U.S. 10-year Treasury papers, the yields there, they climbed to an intraday high of 4.69, almost 4.5%. So that had also had a ripple effect across major global markets, particularly in Asia, where we see it taking its toll on major markets there. But for the Dow Jones Industrial Average, it's a 0.42% pullback, the S&P 500 1.1%, and the Nasdaq almost 2%, 1.89%. So now, at the same time, we also saw that there was an unexpected rise in the job openings for November, which saw a surge of about 259,000 positions. So this is coming ahead of there will be a U.S. Fed meeting, which will be the first for 2025. And then also we also see that there was an ISM reading which showed that an increase in the prices on the month, finding concerns around the stubborn inflation and raising questions around this year's trajectory of interest rate from the U.S. Federal Reserve. Okay, so but for a full detail of Tuesday's trading on Wall Street, let's bring in our Washington correspondent Maria Bird.
The U.S. stock market was challenged on Tuesday as AI companies like NVIDIA plummeted. The Dow Jones was down at 0.4%, the S&P 500 was down at 1.1%, and the heavy tech Nasdaq led the day of declines at 1.9% down. Many investors are a bit concerned in noting that there is likely not going to be any interest rate cuts in the near future, as they are watching to see how things will pan out over the next few weeks, as the inauguration is just on January the 20th, and they are hopeful that after inauguration we could see an uptick in the U.S. stock market. But they are still watching to see what will happen, as Treasury yields are shown to be a bit of an uptick. This is some hope for the U.S. economy, but it's still only time will tell to see what will happen before the end of January.
Our Washington correspondent Maria Bird giving us details of the closing numbers and the closing performance of U.S. stock markets for Tuesday. Okay, final on our list here, we have the Asian markets, which also they took, just like Maria mentioned there, the impact of the U.S. Treasury yields taking toll on major markets across Asia. But guess what? We see KOSPI, which is South Korea's benchmark index for the stocks listed there, being in the green, and that was primarily lifted by the shares of the tech giant Samsung, which rose by 3.43% despite in the midst of choppy sessions. But we see the Nikkei pulling back from the 40,000 to 39,981.06, down by 0.26% for the close of midweek trading session, that's today, as well as the Hang Seng Index down by 0.86%. But when you take a look at China's one of China's key benchmark indicators, it was also down. We saw that the country has announced an updated stimulus plan for 2025. So the markets will be looking out for how that turns out. But for the India stock market, we saw it being in the red, 0.08%. And this is amid concerns of a less optimistic economic growth, which is projected at 6.4% for the full year 2025. And that's a sharp decline from the 8.2% growth recorded last year. And this analysts are saying that this cautious outlook may influence the investors' behavior as they navigate the fiscal responsibility and expectations from one of the world's biggest economy. Actually, that should be the fifth biggest economy around the world. So that's the snapshot for the Asian market as well as some other markets that we track.
Yeah, and we see that the Nifty 50 has been really down for some time now. I guess some forecast is driving that.
Yeah, as well as the issue of inflation is also taking its toll and also driving away investors into that market. But one of the stockbrokers I spoke with says he is expecting that the Trump 2.0 era will benefit in this market. India has one of the around the world. You have many companies which is from India. Talk about Tata, talk about Mahindra, and so many others. Even Bharti Airtel.
Yeah, well, we'll see how that goes. It's in a couple of days. Thank you so much, Anita.
Pleasure.
Now let's move to Germany, and the word is Chancenkarte. I know that Lars will help me better with that, but Germany has been suffering from a particular challenge in its growth, and that's the lack of skilled workers in the country. Many job positions cannot be filled. It hasn't been filled for some time. The government there has worked with a new program that's set to attract talent. And there's some new numbers out on the success of that program. Lars has the details. Hi, Lars. Good afternoon.
Thanks for having me, Ini. Well, let's start with a bit of a vocabulary lesson. We're talking about the Chancenkarte, or opportunity card. That is essentially a visa for foreign workers to immigrate to Germany, and it would be the easiest way to actually do that. It works on a point system. You get enough points or credits, and you're welcome to come over. As for these credits, you need 6 of them, and you get 4 for having a professional qualification. You get 3 for working at least 5 years in a particular profession. You get between 1 and 3 points for language proficiency. And here's a list of sectors where the government is looking for people. It starts with math and IT, engineering, natural sciences and medicine. But just recently, the group of jobs was widened to also include veterinarians, dentists, pharmaceutical jobs, as well as highly skilled jobs in construction and production. Now, it's important to know that applicants from those job sectors do not actually need a job offer from a German company to come here. That is actually the beauty of this deal. They can come here first, and they will get the help they need once they are in Germany. That, of course, includes putting them in touch with companies that hire or with schools for further training if necessary.
Well, but how successful has it been so far?
Well, it has brought a few thousand people here already, so that is per se a success, but the numbers are actually not quite as high as some had expected. In some months, there were actually just a few hundred applications to process, whereas the government had expected 2,500 per month. So there seems to be a little bit of a room for improvement. Now, as of late, the numbers went up a bit, so I guess we're on the right track here. Most of recent arrivals here actually come from India, followed by China, Turkey, Russia, and Tunisia. And now the government has worked out a bit of a marketing campaign telling potential applicants more about Germany, pointing out an opportunity economy, innovative companies, but also a stable democracy, freedom of speech and freedom of press, good schools and universities. Well, if you allow me, there are many good reasons to come and work here. So it'll be interesting to see how many people the country can actually attract. But one thing is certain, Germany needs immigration to fight some recent demographic changes and to keep its economy firing.
Well, Lars, I tell you, a lot of Nigerians will most likely be interested. But let's look at the investors' side now.
We're looking at some more economic data. Maybe just a quick look back, though. Yesterday, we talked about Eurozone inflation. It did come in at 2.4% for December. That's up from 2.2% a month earlier. And that means prices are rising faster again and more than the ECB might like. Obviously, we know the central bank's goal stands at inflation at 2%. Still, analysts say they're expecting interest rates to fall. Today, we're looking at retail sales as well as consumer confidence. Those indicators might be less important for the ECB than inflation numbers, but of course, they're part of a greater economic puzzle that investors are looking at to get a better idea of how the new year is shaping up.
All right, Lars, thank you so much.
Thank you, Ini.
Now let's get back to Africa. Now, Kenya's economic growth in the third quarter of 2024 declined to 4% from 6% that was recorded at the same period in 2023. According to the Kenya National Bureau of Statistics, there was reduced growth in most sectors of the economy in the third quarter of the year. During the period under review, construction activities contracted by 2%, while mining and quarrying registered a contraction of 11.1%. Road agencies in the country constructed just 1,037 kilometers of road in the first 2 financial years of the Kenya-Kwaza Alliance government. President William Ruto's administration cut road construction by 69%, a decline last year, seeing the MOI, and this followed the policy shift that has seen road agencies in the country construct just about 1,000 of the roads for the period. Meanwhile, Kenya's remittance inflows for the year was also shared, and it increased by 5.8% in the third quarter of 2024, boosting forex reserves, which stood at 1.19 trillion Kenyan shillings. The services replicated the same pattern, recording net export of 24.4 billion Kenyan shillings during the quarter under review, compared to 17.8 billion last year. In South Africa, new car sales rose slightly in 2024, but bakkies and trucks dipped sharply. Despite a stronger year-end performance supported by strong seasonal sales to the vehicle rental industry, easing inflation and 2 interest rate cuts, South Africa's overall new vehicle sales decreased by 3% to 515.712 units compared to what they had in 2023. Releasing its 2024 sales statistics, motor industry body NAMSA said passenger vehicles at 351.30 sales were 1.1% higher than 2023, while the overall total was brought down by a 12% fall in bakkie and light commercial vehicle sales, which dropped to 133,254 units, a 6.5% decrease. That brought it down to 7,714 units, beg your pardon, and that happened in the medium trucks, and a 4.9% decrease to 23,442 units in heavy trucks. For the first time since COVID-19 affected 2020, in the year 2020, vehicle exports declined in 2024 to 308,830 units, and that's down by a substantial 22.8% compared with the record performance of 2023, when the industry exported 399,594 units. According to NAMSA, this was affected by various factors, including slowdown in demand in the EU, the domestic automotive industry's key export region, and that's due to low economic growth, stricter emission rules, and competition from cheaper electric vehicle imports from China in the region. The ongoing civil unrest in Mozambique is negatively impacting Zimbabwe, which relies on the country's Beira port for exporting minerals and importing essential products such as fuel and grain. The turmoil in Mozambique began shortly after the October 9, 2024 elections, which were won by the ruling Frelimo party but disputed by the opposition. The protests in Mozambique have also affected Zambia and Malawi, both of which heavily rely on Mozambican transport corridors, including Beira and Maputo trade routes. National Railways of Zimbabwe spokesperson Andrew Kunabura acknowledged that the disruption has led to increased transportation costs, delayed shipments, and a scarcity of essential commodities, including fuel and raw materials for industries. Now, Zimbabwe is turning to smart agriculture targeting communal farmers as it pushes to enhance production across the country. Zimbabwe is reeling from the effects of the El Nino-induced drought that decimated agricultural activities in the 2023-2024 rainy season. At least 7 million people are in need of food aid as a result of the indifferent season. And the Agriculture Ministry Secretary, Obajiri, says government had allocated significant resources towards irrigation projects in the 2025 national budget, including the construction of major dams across Zimbabwe. He said the projects will incorporate various climate roofing technologies such as water articulation and hydroelectric power generation. Jiri also underscores the need for climate-smart agricultural practices in the country as the nation grapples with the impact of climate change. Let's head to the crypto space now with Ladi Williams. Ladi, good afternoon.
Good afternoon, Ini. So I'm sure you see it's blood on the streets right there in the crypto market.
Shades of red.
Yeah, all shades of red at this point. And you see the pockets of green here. These are the stable coins. That's showing you that investors...
But that's so ignorable. I'm sure we have some other stable coins that are in the red.
There are other stable coins there in the top 100. But these ones, these are the ones in the green showing that investors are running to safety. Right now, we see, Bitcoin started that recovery from about $92,000, try to get back above 100K, $102,000.
Yeah, it did yesterday.
Yeah, but all of that wiped out.
What happened,
Just
Ladi?
one fell swoop. Somebody's going to tell us what happened.
Okay.
But I haven't.
I'm listening.
I have an inkling. It's looking like rate cuts are not looking like it's going to be cutting.
No, but we have been warned about the rate cuts.
Exactly, but it's causing a lot of jitters already for risk assets.
I thought markets would have adjusted, investors would have adjusted their sentiments because we had good cuts.
Fantastic cuts in
last
2024.
year, 2024. So
but the Trump effect. Everyone's expecting some kind of
only China that was afraid.
wars that could also bump up inflation. So I guess that's why the U.S. Fed is saying, you know what, we might not cut as much.
Yeah, let's take it easy.
Let's take it easy on the cuts. Well, you know how investors can overreact, sometimes. And so we're seeing that play out in the market now with Bitcoin down about 5.66%. Let's look at the top headlines in the market. I see Telegram, that reaches $1 billion revenue. That's a social network platform. It reached $1 billion with the TON network. We saw all of that onboarding, with users. They onboarded about 1 billion, at some point. So all of that tapping we saw with the Telegram and all those games that were promising you life-changing money that some didn't deliver, all of that playing into that Telegram revenue. Then we see the Czech National Bank, they're mulling adding Bitcoin to their reserves. Yes, not just the U.S. The governor of Czech National Bank has expressed interest in Bitcoin as a potential addition to the country's foreign exchange reserves. So we see all of that playing out in the market right now. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide.
Hello, Ladi. Good afternoon.
Good afternoon, Olumide. I think the last time I saw you was in 2024. Happy New Year, Olumide. So, we're seeing a lot play out in the market right now. It's deep red, and it seems it's all about rate cut jitters in 2025. The U.S. Fed not looking like they're going to be cutting with the same energy we saw in 2024.
Yeah, Ladi, there's so many things. I listened to your pointers a few minutes ago, and not just the hawkish U.S. Fed. Investors are deleveraging risk. You see what's happening in Canada, China, and Europe. It tells you that market contagion is expected to take shape because we're seeing the dollar hovering over a 2-year high. The last time we saw the euro at this level was in 2022. And the fact that Bitcoin rose above $100,000 and lost to 95,000 support as we speak tells you that there's strong profit taking, and that has really hit on the market low for risk. US stocks suffered, Nigerian stocks suffered, the crypto market also suffered, European stocks suffered, Asian stocks suffered. So unsurprisingly, Ethereum lost the 4,000 support. Now it's even struggling to breathe around the 3,400 benchmark. So market punters are looking at the fact that it might be more of a profit taking than the much anticipated Trump inauguration rally. And that's because I think investors have priced the November rally, which Bitcoin rose by more than 40% that month. 35% that month. And now it seems that it's looking out of gas. But, looking at the market, you can't undermine Bitcoin because it still has traditional interest. We saw BlackRock inflow in 2024 being one of the best. It even outperformed gold in terms of inflows. But having said that, I don't see that run we saw in 2024 coming to play in 2025 because of two reasons. We're seeing the flu disease eating from China to the United States coming, and also the fact that Donald Trump is threatening the world with tariffs. I think investors are more cautious with taking undue risk.
And when you look at other bull markets, we've seen the first time Bitcoin hit about $20,000, then we saw that massive pullback back to close to about $4,000, $5,000. Is this time different? We've seen Bitcoin rally on the Trump trade over $100,000. Do we still see those kind of pullbacks coming?
Right, to be honest with you, I don't see it doesn't look different. Look at the US dollar index. The US dollar index is at 109 index points. That is very high. If you look at US yields, there were strong sell-offs in the US debt market. You look at Nvidia stock was down by 5% yesterday. So it just really tells you the perception investors are having with risk. And Bitcoin unfortunately has a positive correlation with risk appetite. So when the market has less risk, Bitcoin suffers. And as we speak, like you see, it looks like Bitcoin is struggling to keep the 95,000 support level.
All right, so 20th of January, we'll have Trump will be inaugurated as president in the U.S. What happens after that to Bitcoin?
I think we're going to see some positivity in the first quarter at least. He has said that based on his campaign promises, they're not selling Bitcoin. He has brought in a pro-crypto regulator to run the affairs of Security Exchange Commission. But, people tend to forget that Gary Gensler was also a pro-crypto prominent before he became anti-crypto. So I think it's most going to be a wait and see from the second quarter. But the first quarter, I don't see Bitcoin breaking below 60,000 at least. I think Donald Trump will keep that supported. However, Donald Trump's threat on more tariffs, American populism, immigration might really hurt investors' appetite.
And looking at Nigeria, we've heard the SEC chief has been described as crypto friendly. Gary Gensler is out in the U.S. We're seeing Trump, pro crypto at this time. So is 2025 looking like the crypto friendly year for regulation, and maybe that continues?
Yeah, I definitely share the bias. But if you look at the case of Nigeria, it's much more a verbal approach rather than we're seeing substance here. Look at the fact that balance is not yet back. Look at the fact that trading in the space seems more like a dark channel, despite the fact that the SEC has brought in clearer regulations on how the crypto space works. Bitcoin and utility tokens are now classified as commodities rather than securities we had before. So yeah, we have much more informed, better ecosystem. But the problem is that players that could make the difference, like players like I mentioned, are still missing. So we've not really seen that positivity in the space. However, I think one thing is clear: President Tinubu's administration will likely not bring in P2P crypto, where the Naira played a systemic role in the crypto space. I don't think that happening in future because of the Naira stability objective around the CBN.
All right, so much to unpack. Still early days, 2025. We'll see how it all plays out for the crypto industry in Nigeria. Thank you so much, Olumide Additional, financial market analyst. Thank you.
Thank you for having me, Ladi.
All right, so there you have it. Olumide says, is the SEC chief really that friendly? If he was that friendly, maybe Binance would be back.
He also raised the question, that is it possible to see Trump become anti-crypto later in the future?
Later in the future, things happen.
Change is the only constant thing in life.
Right.
We'll see. Thank you so much, Ladi. Well, that's it on the program. Thank you so much for being a part of Business Incorporated again today. Been a pleasure being on this side. Hope to do it again with you tomorrow. But remember, you can always go to our YouTube channel and watch Business Morning, Business Incorporated, because it's best to stay informed. But I'll see you tonight. Stock market reports, another information coming your way.